Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and before we get going, reminder, go to DAIXRP.com to join the Patreon. That's the private group where we do the extended videos, no commercials, or you can join right here. Click under any of my YouTube videos, click the join button there. Today we're going to talk about, I'll call it the lost XRP document, and we're going to show you what some of the chart guys are seeing after the little run up we had in the last 48 hours with XRP. It pulled back some today. Now, I was on the phone with my father, who is the official father of the Digital Asset Investor channel, and he asked me specifically, he said, "You've been talking about Caleb and Brown, but you need to talk about what's one of the most important things that there is, which is that most of these exchanges have, especially when the market starts really humming, they have these withdrawal limits." And he said, what good does it do you to be able to get out of your XRP at a certain price if they're going to hang all these withdrawal limits around your neck where you can only withdraw X amount, per day or whatever? Well, guess what? Caleb and Brown does not have those. Here's Jake Boyle from Caleb and Brown.
As the bull market heats up, we are hearing the same frustrations over and over. Clients locked out of accounts, withdrawal limits suddenly set to $0, and repetitive verification demands. Sound familiar? Your funds should always be accessible when you need them. Finding human support feels like a maze. Just automated replies, endless waits, and silence when the market can move 100% in days. Tired of hidden fees or receiving the wrong coins after withdrawals? Imagine expecting to receive one token but getting another and then having to pay fees to swap it back over. We've actually seen some exchanges swap ERC20 tokens directly into Ethereum and Stellar tokens into XLM when withdrawn, always with additional fees, of course. These issues might go unnoticed when the market is quiet, but during peak times, they're a nightmare. Platforms freezing during high volatility leave traders unable to access their funds when they need them most. At Caleb & Brown, you'll never face downtime. Our services are always online and ready, no matter how volatile the market goes. We believe cryptocurrency should work for you and not against you. With us, you have access to a personal cryptocurrency broker with a 24/7 team surrounding them. No automated responses, no endless wait times, just real human support when you need it most. We have no withdrawal fees and no hidden costs. You can move your coins at no cost anytime you need to. Plus, no custody costs and certainly no dynamic spreads. Two sneaky expenses we are seeing in the market during this bull run. At Caleb & Brown, what you see is what you get. Transparent fees only on the trades you make, no surprises. We're the world's leading cryptocurrency brokerage, existing for over 8 years. Join Caleb & Brown today.
There you go, and I've made it real easy for you if you want to open an account. I created xrpwealth589.com. If you go to that domain name, it will forward you to my page here on Caleb and Brown, and you can click the sign up today button. My brother opened an account yesterday, and I told him to talk to his broker to get on the same page about what his plans are. Now, here's a little XRP Las Vegas flashback. This was from, this is Brad Garlinghouse. This was a satellite event that the Chamber of Digital Commerce did. Here he is.
If anyone thinks that Ripple is not 100% behind XRP, is just missing, they've lost the plot. Like, we are totally committed, and we will remain totally committed.
Yeah. This year, for the first time, Brad Garlinghouse will be on stage at XRP Las Vegas. Go to xrplasvegas.com. Don't wait too long. We're 35 days out now, folks. Okay. XRP's now back up to 216. The market itself is at 2.89 trillion. Look at this, the fear and greed index, it was down into the teens before. It has jumped back up to neutral. Look at this, China, there's mixed messages coming out. You'll see Trump say we're talking to China, then China says we're not. Here they say no ongoing trade talks with the US, calls for canceling unilateral tariffs. So there's a lot of jockeying going on. Then there's this from Gold Telegraph. China has released an action plan to promote the use of the yuan and its own payment system in international trade. There it is. Who has been working on such things for all these years? Now, The Bitcoin guys, they're and I said it here, they're creating as many new buyers as they can before real-world utility digital assets are activated with legislation. That's what you have to do when you don't have utility. Here's the kid, Jack Mallers. He's the same one that says that the hill he's going to die on is a war with Ripple over XRP.
EPS stands for Bitcoin per share as opposed to earnings per share. And the other is BRR, which stands for Bitcoin return rate. And my job and what I'm dedicated to do for our shareholders, in which we view similar to our customers, is grow our Bitcoin per share. So we're an operating company. And when you buy a share of 21, in a hypothetical sense, what we intend to do is, let's say our Bitcoin per share is 0.05. Our intent is to be able to grow that to 0.06 Bitcoin per share, 0.07 Bitcoin per share. Where a vehicle like an ETF, your exposure is static. So 21's an operating business, and we will be building Bitcoin products, Bitcoin operative cash flow, and then using the capital markets to accretively grow the Bitcoin on our balance sheet. So we want our shareholders to get wealthier, get richer in Bitcoin.
Now think about this for a minute, folks. This is cuckoo for Cocoa Puffs. He's created a company that has no product or service to generate revenues for the company. He's telling you that he's creating a company that's its entire purpose is to buy more Bitcoin, which in down markets has a history where it can go down as much as 80% in those down markets. This is crazy. Now compare that, let's use a little common sense here. Compare it to Ripple, the company. Ripple, the company, has these huge holdings of XRP and actively works on not just having a product where it works with banks and financial institutions, but at the same time, Ripple is integrating RLUSD and XRP into the product for actual real-world use in cross-border payments, and then tokenizing treasuries and down the road tokenizing everything. The Amazon of crypto versus what he's describing as a joke. Now, and at the same time, CNBC and Bloomberg, every time some scheme like this is introduced, they're the first ones. They're right there to cover it. And then just like the interview yesterday with the XRP ETF guy on Bloomberg, the Ethereum or whatever, I can't remember the name of the company. They were like, well, we don't the woman was like, well, but what's the use case? I mean, I don't understand. And it's like, it's the opposite. We're living in an upside down world. The one that doesn't have a use case is Bitcoin. This is crazy what they're doing. And all it is, I'm telling you, all it is they're having to create as many buyers, whether it's a country or a state or creating companies that buy Bitcoin. I mean, this screams Ponzi scheme. I don't understand what in the world is thinking. No use case, no value in the end, folks. Now, I'm not saying Bitcoin is not going to have value. I don't know how long the Ponzi scheme will last. But if it doesn't have utility, I'm not buying it. Now, that doesn't mean that, look, I have bought Bitcoin in the past, but I sold it. I mean, I sold my Bitcoin. I had 2 or 3 in my iTrustCapital account, sold it and bought all XRP with it a few months back. It's not that you can't make money on it, buying and then selling, but in the mid to long game, I'm all in on utility, because that's what's going to create real value when the world needs it to use. Look at Coinbase.
Of that was occurring. So institutions, sovereigns, patient pools of capital were piling in during April, which resulted in about a 13% increase in Bitcoin versus 10.5 for gold. And retail via the ETF were exiting. So you got to kind of ask yourself, what do the institutions know?
Were the institutions buying Bitcoin direct? And how many of them are now buying via ETFs or other forms?
Well, hard to say. They don't, especially the sovereign wealth funds don't report.
Right, no, but you're also, I imagine, seeing the ETFs buying. Because the ETF should be buying on a
in the last couple of days.
But the ETF should be buying on a relative basis on behalf of their customer base.
Right, assuming there are inflows, right? But the last couple of days, yes, we've had inflow. But still, as of yesterday, should change today, we've had net negative ETF inflows. So, so the first reason is de-dollarization. The second reason is this tech unwinding of this big levered tech trade and Bitcoin trading on its core characteristics, which again are similar to gold. You've got scarcity, immutability, non-sovereign asset, portability.
Right.
So trading the way people who believe in Bitcoin would like it to trade. Mm-hmm. The last was, to me, the most interesting, which is, I spoke to a couple of traders who said, look, if you believe these conditions, these de-dollarization conditions are going to persist, you're looking at gold, obviously, first and foremost, but maybe you missed out on that trade. You're looking at that rally and saying, I missed the boat on that. So what other assets could participate in that market panic long-term inflation hedge? When you do the work, there's a very short list of assets that mirror the characteristics of gold. Mm-hmm. Bitcoin is on that short list. In addition to the 4 characteristics I mentioned, it's mining scarcity, it's mining difficulty.
Okay, enough of that. And then look at this. This is more crazy.
But I think it's clear at this point that, Bitcoin is a better form of money than gold. It is.
That's like fingernails on a chalkboard to me. That is such a lie.
Provably scarce, just like gold, but it's more portable and divisible. So you can actually use it, has higher utility, I would say. And it was the best performing asset of the last 10 years. And so for store of value, I think it's going to be important for governments to hold this over time. It might start with being 1% of their reserves, but I think over time it'll come to be equal to or greater than gold reserves.
Okay, great. Well, let's go to the next question.
How come nobody ever asked these guys, would Bitcoin have the market cap it has right now if it didn't have a regulatory monopoly for the last 10 years? The answer is no. What would have happened is the digital assets like XRP, who have been held down back through intentional regulatory capture, would have swallowed it whole. Now look at this, and you need to ask yourself this: why does this is the same mainstream media? I'm talking to you, CNBC, Bloomberg. These are the same people that have lied to you about all sorts of things over the last 5 years. That same media that helped carry the lies for the bad guys all these years. They plaster Bitcoin everywhere. Every time Saylor or Jack Mallers announce a new scheme to create a Bitcoin buyer, since it has no utility, but completely ignore what's going on with gold. That's called a tell. Pay attention. The Florida House of Representatives just passed HB 999, which, not 589, but 999, which designates gold and silver as legal tender in Florida. That is what you need to be staring at. Look at this. Senate is likely putting its stablecoin bill to vote in 2 weeks. Sources tell me, and Coinbase is lobbying to prevent the bill from passing on its own because the company worries lawmakers may not have the appetite to pass a market structure bill later on if they've already passed another bill, another crypto bill. Coinbase concerns have been echoed by A16Z. We know about their history and Coinbase's history, and by House Financial Services Chair French Hill. Sources tell me, but the campaign to put stablecoin bills on ice until one giant crypto bill is beginning to actively anger other crypto policy leaders who worry waiting could be a huge mistake. For instance, Digital Chamber, a prominent crypto lobbying group. Remember, folks, all these guys, Coinbase, A16, these guys are all in the tank on the Bitcoin thing. Stablecoin legislation opens up the floodgates for the rest of crypto. You know, the digital assets that you can actually build stable coins on. I believe that this is a purchase for more time to create more Bitcoin schemes to accumulate before all this real utility kicks in. Question is, what other things? This was Satoshi Nakamoto back in the day. I've moved on to other things. He says down here, this guy says, imagine the collective weeping of the Bitcoin community if it was proven Satoshi moved on to the XRP ledger or something affiliated. Anders says it would be exactly like this. That's impossible. Yeah, it would be like that. Folks, remember that time that the person, Kendra Hill, who disappeared from social media after saying that XRP was not about cross-border payments, it was about derivatives? Well, listen to this. DTC's great experiment provided an example of stable coins on chain.
Tom Sullivan, head of...
When you hear DTCC, you think all the money, folks.
Business development for digital assets at SocGen in New York. I'm excited to talk about our stablecoin that was issued by SG Forge in 2023, EuroCV, also known as Coinvertible. The Coinvertible stablecoin was issued with the main purpose of driving capital markets activities on chain. It was issued on the Ethereum blockchain in 2023, and in 2024 it became MiCA compliant. Along the way, SG Forge has established a number of milestones, including becoming one of the first banks to become a virtual asset service provider in Europe and to be able to support the MiCA rules. When MiCA went live in 2024, it was fully MiCA compliant, and it was also became fully transferable on the Ethereum blockchain. Since then, it will now be available on several other blockchains, including Solana,
several others that work,
Ripple and Stellar. And we're looking forward to being able to use it as a means of cash and as a means of collateral using in this project.
All right, Tom, I see that the collateral movement that you just processed has already settled and our exposure is covered. That's amazing. You entered a movement on your side, and since we're using the same distributed ledger, I saw it update instantly within a matter of seconds, and my exposure is completely covered.
Joe, thanks so much. I mean, this has been so easy to do, and it's one of those things that when you think about all the time and effort we've spent in the past trying to find the right assets and to be able to deploy them and move them around and make sure that we have our assets reconciled, and to be able to do this so easily, it's just
sounds like something you'd use in a systemic event. Now, Charles Hoskinson's gone and done it. Listen to what he says here, almost as if Ethereum was a prototype.
If you were running the Ethereum Foundation, what would you do differently in a broad sense? Well, the number one problem Ethereum has is that they took an easy road out where they did three things wrong. So first off, wrong protocols. They have the wrong accounting model, they have the wrong virtual machine, and they have the wrong consensus model. All of these were self-inflicted wounds. People told them not to do it. They did it. And, they got where they needed to go. Second, what they chose to do to solve these problems is put in all these weird slashing economics and layer twos and other things. And now they're living with all of the consequences of these types of things.
Remember that, Tom? Matt Hamilton, who did that, I played that video, or no, I was listening to him on a Spaces, and he's a guy who worked for Ripple for a long time, and then he went and worked on Ethereum as a developer, and he said, and I'll never forget it, he said the reason that Ethereum has so many developers is because there's so many problems to fix. And he said the XRP ledger doesn't have that problem. It works.
And third, they really don't have a good on-chain governance system. So really what needs to happen is you need a parallel track with solving all those three things. First off, you have to solve your technological problem. So the current protocol they have for proof of stake is wrong, and they need to wean themselves off of that protocol gradually. And I think Ouroboros Laos, this whole telescoping protocol design is the way to go. And there are certainly other ways you can go, but I think the object model of SWI would be probably the best model for them. SWI solved a lot of things. Narwhal and Tusk is good. The dev model is not so bad. I think it is good to go to risk 5. That's a really good decision for Vitalik to make. It makes a lot of sense. But the accounting model also has to be kind of revised a little bit. And that's why the SWI style approach is better. If you want to stay on accounts, you have to move to like a Nomia. We have the right virtual machine. People will start fighting, and it'll get harder and harder.
Here's the part.
And, it's kind of weird now, but it'll be awesome in 3 to 5 years. For them at their scale and size, it'll take 5 to 7 years to build an on-chain government. So I don't think Ethereum will survive, more than 10 years to 15 years. The layer 2s will continue to suckle out all of the alpha, and people will start fighting, and it'll get harder and harder for Vitalik to be able to hold it together through sheer force of will. And users will gradually migrate to other places, and then they're going to get eclipsed by Bitcoin DeFi, because once that turns on, the TVL will be larger than Ethereum. And a lot of people will start migrating in that particular direction, and that paradigm's in UTXO.
Let me translate. Ethereum is MySpace. Okay, we're going to go into DAIXRP.com, which is the Patreon. If you'd rather join through the YouTube, you can click the join button below this YouTube video. we're going to, someone asked me yesterday for a certain document, if I could find it, and it took some searching. So I call it the lost XRP document. I think it summarizes not only what happens with XRP in the future, but also what Bitcoin and Ethereum really are and were. We're also going to tell you what, there's an interesting video about what somebody's seeing in the chart I want to play for you. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family. Here we go.